Apparel, engineering, and home decor are where the interesting picks seem to lie this week. And our folks here at the Roundtable are going to tell us more about them. And Kevin, we start with you in the engineering department.
Yeah, Quanta Services, ticker PWR, power, right, specializes in electrical power construction. So they serve a lot of utilities. They did have a telecom business, which they just sold to Dycom. But, you know, this is a field where obviously any utility expansion, they require services from Quanta. And they also have a growing area in providing construction services, electrical services to energy companies that are building out any kind of, you know, domestic fracking operations. And that's about 22% of their business. So 2/3 is for utilities and corporations. Just strong earnings growth here. They beat by 30% last time around. And I want to look at them sort of as a group, too. There's a couple other companies here. Mastech, MTZ, has been on a tear, and EMCOR, EME. Mastech is primarily telecom for the utilities. And you look at the telecom sector, sort of weak right now, right? But maybe it's because these guys are having to do so much build-out of their infrastructure. So, you know, AT&T, Verizon, Sprint, they've got to keep building the network to stay competitive. But you start to see headlines about the slowdown in growth of, you know, mobile handset sales. Maybe there's some limits to growth for the big carriers there, but still they need the services of these guys. So Mastech, think for the telecom construction, and Quanta more for utilities and energy. Okay. But a couple of names you definitely want to keep an eye on here. And Quanta hasn't run as far, whereas Mastech has just been on a vertical ascent here. So I don't want to play the stock that's run too far.
Okay. Tracy, home decor.
Yes, Masco, ticker is MAS. I don't think I've ever discussed Masco before. No, and I think that's because you know, they were in an area because they make kitchen cabinets, they do plumbing, they have paint, the Bearer paint. I mean, these are all housing-related areas, and it hasn't been good. I mean, the earnings, you know, plunged during the recession. They've been really slow to ramp up, but now suddenly, like the light has come out. You know, the sun is shining. They just reported earnings. It was much better than everybody expected. They're starting to really see the ramp up in housing now. So, you know, the earnings growth this year is supposed to be 93%, but it's coming off the low level, and it's supposed to be double digits again in 2014. They're starting to see big gains in their cabinetry. That was up in North America about 13% this last quarter, and installation, which was up 30% because they have to install everything, and that was the first time since 2008 installation has even been profitable for them. So you're starting to see the turn. Now the bad thing is everybody else has kind of already seen the turn, so they've all run into the stock. It's trading about 32 times right now, but I do expect earnings to start to ramp up here. But you're paying a high premium. It is a Zacks ranked #2, and it does have the earnings growth, but it's a little pricey.
Okay, you've got a pick that makes you feel good all under, huh?
That's right. Yeah, Hanesbrands has all the well-known brands in the under and in other areas. They were spun out of Sara Lee, like so many others in 2006. At the time, things were very good, and Sara Lee gave them a ton of debt when they were splitting them off. Seemed like a good thing to do at the time, but then in 2007, 2008, things went south, and the debt load was too heavy for them to carry. And then they were under the shadow of that debt for the next 3-4 years. Last year, the year before, when cotton prices really went up, which squeezed their margins and their ability to service their debt, they did a lot of restructuring, and they have been using the excess cash produced to pay down debt. So balance sheet is no longer an issue. Now cotton prices are a lot lower. So even when they're not making as much gain on the top line as many of us would like, margins are expanding, and a lot of these earnings are coming down to the bottom, and a ton of cash flow, no dividend right now. But if the current debt payment schedule remains in place, then one could reasonably expect some sort of a capital return in 2014 as well. Maybe dividends, maybe buybacks. Excellent story. Margins, earnings outlook is very strong. Zach's number 2 right now.
So that's where you get in the rising estimates from the margin expansion.
Right.
Yeah.
That's right. Yep.
Okay, thanks for that. Don't forget to check out other stock picks and stock picking strategies on our website, zax.com, if you're not there already watching this video. With everyone here, I'm Terry Ruffalo.